back into DI. So today I'm going to talk about how to construct a portfolio in 2020. This is going to be a three-part series where I'm going to talk about how to invest your money if you have a $10,000, $100,000, and $1 million. Uh, so in today's video, the first part of the series, I'm going to talk about how you should invest your money if you have $10,000 to invest. Before I start, I just want to make sure that everybody is aware that this is not financial advice. This is just the opinion of the channel, and you should do your own research and make sure that wherever you invest your money, uh, you know what you're doing with it. So just want to make that clear before starting off. All right, having said that, so another point I want to make sure that everybody understands is like when I say you have $10,000 to invest, that that takes into account that you have enough cash on hand to live your life over the course of next 3 to 6 months. If things go wrong, or if there's a rainy day, like those times are really uncertain in 2020 with the pandemic and everything. So make sure you have that money secured. That if say you lose your job tomorrow, you have enough cash flows coming in that you can sustain yourself. So I'm taking that into account. That you've done that calculation for yourself, and after having done all that and having made sure that you'll be safe for the next 3 to 6 months, you have $10,000 sitting in an account which you think you should be investing somewhere, and then you come here and figure out where to invest. All right. So if you have $10,000, then I'm gonna break it down into four categories. The first one would be gold and silver. So I'm gonna put 10% of that money into gold and silver. So let's say 10,000 bucks, 10% is $1,000. So that goes into gold and silver. Now you can put that into paper gold, buy ETFs with it, or you can buy physical gold, depending on what you prefer and where you are and all of the factors. So I'm not going to go into any details on all these categories apart from the digital asset one today. But I'm going to make separate videos on each of these categories and which is the best investment to do in some of these categories. So after gold, I'm going to put 75% of that value into digital assets. This includes uh, everything in terms of cryptocurrencies. I'm going to talk about this in a short bit. And then I'm going to put 20% of that value into stocks and equities. So that's around $2,000 I'm going to put into stocks. And I'm going to be pretty specific in terms of which stocks I choose. Because again, like I said, there's a ton of money printing happening all around us by the Federal Reserve and the government. It's not going to stop anytime soon, it looks like. So all that money flowing into the system is only going to drive up the equity prices. So you're going to see this big, huge shoot up in equity prices over the course of next year. Having said that, there could be mini crashes along the way. We're basically playing a catch-up game. So either the stock market catches up to economic reality on ground, or the economic reality catches up to the stock market performance. Your guess is as good as mine which way it's going to go. But with the amount of money printing and the manipulation that's happening in the market by the Federal Reserve, I wouldn't put it past them to rise the stock market to all-time highs uh, in the next year and even higher. So I'm going to put a little bit of that money into stocks, but I'm going to be very specific in terms of the stock that I'm going to choose. Mostly going to go with tech stocks and some hyper growth stocks in some industries that I like. But again, like I said, this video is not going to go through details of gold and silver and stock markets, mostly about digital asset allocation. But I'm going to make other videos to cover that up as well. Then I'm going to put 5% of the value into Treasury Bonds. This is just for protection, just in case there's a mini crash along the way, which can happen anytime this year. So we have that. Then the interest rate might go even further negative, and you might save yourself some money by having those Treasury Bonds, which have inverse relations to the interest rates. So you might make some money there. Uh, because I feel like there might be one more downturn coming before there's a huge melt up in stocks and equities and all other assets. So having that 5% allocation is just an insurance in my opinion, but that's not going to last for long with the interest rates are at all-time lows. All right, having said that, the big allocation, like I said, I recommend is doing in digital assets. If I'm personally investing $10,000, I had out of all that, what I'm gonna do, so I'm gonna, so like I said, I'm gonna put 75% of that value into digital assets. So out of that $10,000, that's like around 7,500 bucks. So 40% of that I'm gonna put directly into Bitcoin. That's around $3,000 in Bitcoin. Bitcoin is the safest digital asset out there. It's the hardest form of money, and that's the one sure shot safe bet. If Bitcoin goes down, then everything else tanks. So that's more of a safe haven in my opinion, and that's why having a major portfolio allocation to Bitcoin is really important. Then you can, there's a lot of other ways you can put the money that's left. What I'm personally recommending is doing 30% of allocation to platform plays for DApps or smart contracts. The biggest one, like most of you should be aware, is Ethereum, which has already gone up in value. It's already tripled, if not more, from the all-time, the yearly lows in March. So yeah, I mean, if you have say $7,500 in digital assets, 30% of that is 2250. So put that money into some of these platform plays. I would put most of it into Ethereum, so 80% of that, and then I'm going to diversify the rest 20% into Cardano or Tezos. Again, this is not a video to go into detail in any of these coins, which I'm going to talk about in further videos, but this is just an allocation perspective. Then 20% of that allocation I'm going to put into some of the DeFi plays. So if you haven't noticed recently, DeFi has been on the rise significantly. There's been a lot of boom in DeFi, and this next market cycle that's going to come up in digital assets is going to be most likely DeFi related, or the hype is going to be around the DeFi space. If 2017 was the ICO bubble, I'm expecting the 2022 2023 bubble to be related to DeFi. So having some allocation there would makes a lot of sense to me. Uh, the major DeFi plays, I feel the biggest one would be Link, Chainlink. That's the DeFi oracle. Powers all the data feeds into these DeFi plays. So most of that allocation, I feel you should probably do that in Chainlink. The other plays, there are a lot of other options, and there are more better people out there on the internet who can tell you about these. But some of these include Carbon Network, Zero X Protocol, Maker, Compound, Band Protocol, REN, Balancer, and so many other more which I haven't mentioned here. But having some allocation to some of these speculative DeFi plays probably makes sense. And then 10% again, I'm probably going to put into some other speculative plays like WeChain, which is supply chain related, Engine Coin, which is gaming, and RLC, which is computing related. So, like I said, if you have $10,000 and you're not looking at wealth preservation, you're looking more at wealth creation. The only way you can do it is by making concentrated bets and being successful with it. And I think in the next couple of years, with the next cycle of digital assets, that's the best trade that you can make. So I would, like I said, put 75% in digital assets, mostly into Bitcoin, and the next biggest allocation should be in Ethereum, and then just depending on how conservative or risk taking you are, have some allocation to DeFi. Again, this is none of this is financial advice. This is just a recommendation or opinion. So make your uh, make your own decisions, do your own research, and then take a call. And you know yourself best. You know what kind of an investor you are. If you're a long-term investor, if you're a medium-term investor, if you're a day trader, so things would look very different to you depending on what kind of personality you are. We in this channel are people with low time preference, so we long-term allocators. We play market cycles, so we are not affected by day-to-day fluctuations. But if that's something that affects you, then you should take that into account because digital assets is very speculative at this point. It's a trader's market, so things can go up and go down pretty quick. So you should be knowing what you're doing, not get affected by it on a daily basis. Having said that, if you have $10,000, that's my portfolio allocation for you in 2020, probably even for next year and up until 2022 or until the cycle closes for uh, this digital asset space in this next 2 or 3 years. All right, so I'm gonna wrap this up here, and then I'm gonna see you in the next video where I'm gonna talk about portfolio allocation if you have $100,000. Again, if you like the content of the video, make sure to like, subscribe to the channel, leave a comment, uh, and then yeah, I'm gonna see you in the next video. Take care. Cheers.